Oil prices rose today to remain near a two-month high. Domestic crude settled above $58 a barrel as global supplies have fallen. But the industry faces a number of challenges, including the amount of debt that's been piling up. Brian Sullivan has more.
The numbers really are staggering. The U.S. oil and gas industry has around $200 to $250 billion worth of total debt, and much of that comes due in just the next couple of years. Let's break it down by type of company in the industry. According to Moody's Investors Service, the exploration and production companies, E&P, are in the worst shape with about $93 billion worth of debt due. The oil services companies, they've got around $31 billion, and the midstream, that's the pipeline companies, they're in hock for about $72 billion. The industry's total debt across all years is about $600 billion, which is nearly half the industry's total annual sales and 10 times more than the entire industry's net income. Think about that. Now, these companies have been able to ride it out the last couple of years or two, but it gets serious beginning next year when the debt bill really starts to come due. And it's not just the big numbers that has the market spooked. It is this. It is that most of this debt is junk related, some of it deep into junk. The purple right there at the top, that is the worst rated debt in the industry. It matters because it makes it more difficult, more expensive, or even impossible to refinance or extend the debt, like many companies did back in 2016. Now, this debt load, along with stagnant oil prices and the pressure on many funds to sell fossil fuel company stocks, have absolutely decimated energy investors. The average return for all onshore oil and gas stocks the past year is a drop of 38%, and many are much, much worse. And this may be the most incredible stat of all. Because of that stock drop that I just talked about and the weight of all the debt on market caps, the combined market valuation of the 55 biggest U.S. onshore oil and gas companies, including Exxon, Chevron, Occidental, and a lot of names you know, is now $400 billion less than the expected value of just one company, Saudi Aramco. One company, the entire onshore oil and gas industry. Energy stocks, they have never been more hated, and debt is a big reason why. It is a big story to watch heading into 2020. For Nightly Business Report, I'm Brian Sullivan, CNBC.